Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So, a lot of volatility back this week, and it seems to be all about inflation. So, first, we got a Richmond Fed survey that indicated manufacturers expected higher prices in the future. And then this morning, the Fed's preferred inflation gauge increased more than economist expectations. All of that leaving many to believe that interest rates are going to stay higher for longer, and potentially tariffs and other policies are going to lead to higher inflation. But when you look at the bond market, doesn't seem as worried about inflation as consumers looking out to the long term. Now, the Richmond Fed survey came out this week, and that's when we really started to see some selling after that 3% bounce in the S&P 500. And it surveys manufacturers about their expectations. And this is just one section of the survey that's showing 7%. That's incredibly high. 7% prices being higher in the future. And that mirrors, if you look at the consumer sentiment surveys, the conference board surveys, consumers are very, very worried about inflation, much of that related around headlines and the uncertainty around tariffs and government policy. And it has a lot of investors and consumers very concerned and fearful about what that means for inflation. Now, when we look at the Fed's preferred measure, the PCE, which is the personal consumption expenditures inflation report, year-over-year change on the chart here, we see the PCE at 2.5% and the core PCE, which excludes food and energy, at 2.8%. Both of those are still above the Fed's target of 2%. But this morning's reading came out slightly above economists' expectations. We saw the market tumble dramatically, the Dow down more than 500 points, large caps and small caps across the board, widespread selling. Perhaps we're going to go back and test those lows. We're still a little bit above them now. Month over month, this inflation report came in at 0.4%. That was above expectations of 0.3%. Some concern and fear that that inflation everybody's been concerned about is finally coming to fruition. Now, we talk about inflation, and that means interest rates are going to be higher for longer. Remember, the Fed has the Fed funds rate at 4.5%. But for companies, this is what this means. Take a look at the percent interest expense as a percentage of total debt for Russell 2000 and S&P 500. Just a reminder, the Russell 2000 are 2,000 small cap companies. So those are the smaller companies, and the S&P 500 are the 500 largest companies by market cap in the US. And you can see the interest expense as a percentage of debt continues to climb, but the Russell 2000 is at 7.2%. And the S&P 500 is at 4.2%. So that interest expense on debt having a much greater impact on small caps. And that's why you continue to see that they've been lagging throughout the bear market in 2022 when interest rates went higher, and they just can't maintain any kind of consistent leadership when you have headwinds like inflation remaining well above the Fed's target and interest rates slowing down in terms of the Fed cuts and remaining pretty high. Now, long term, the bond market is not as worried about inflation as some of these consumer reports that we're seeing from consumers. If you calculate the various bond prices going out 5 years, this is called the 5-year forward inflation rate break even, which shows us what does the bond market expect in terms of inflation. You can see it's under 2.5%. So even though some surveys are showing 5 to 6 to 7% expectations for inflation over the next year or two, bond market is not quite as worried about inflation. This somewhat mirrors what the Fed said at their latest meeting, where they said they still expect to cut rates 2 times this year. And although they think inflation is a little bit higher than expected, maybe growth is a little bit lower than expected for full year 2025. Right now, they're remaining patient and aren't as concerned and fearful about inflation and how long those tariffs might impact inflation as many consumers are today. Now, let's wrap it up with a bit of sad news for those of you with kids or those of you that remember their childhood. No, that's Paddington Bear right there, a famous character from a well-told children's story. And they were launching a new book series, so they were placing different statues of Paddington Bear along different city benches in England. And two men, drunk late at night, early in the morning, went over and stole the Paddington Bear. I guess it sounded like a good idea at the time. They ended up breaking it on accident or on purpose. Who knows? Ultimately, they were caught. They were two men in the British military. The judge scolded them and says, "You did not live up to the tales and the takeaways and the lessons from Paddington Bear about being nice." And they had to pay about $4,000 for refurbishing and building a new one and do quite a bit of community service. So hopefully they get the Paddington Bear back out there on the benches and everybody's able to enjoy the new story. Hopefully those guys learned a lesson not to steal Paddington Bear from benches at 2 a.m. in the morning, regardless of how much you have to drink. With that, I want to thank everyone for watching, and I'll see you next time.